Hello all and welcome again in the series of lectures for financial accounting and analysis. I, Dr. Shikhar Jalota, welcome you for this session. In the previous session, we talked about the journal, the basic format of journal, and solved a small basic question of journal entries. So let's take up the topic to further complicated questions. And for this question, we will be dealing with the ledger and the trial balance also. So we'll continue with the same question for journal, ledger, and trial balance for the future lectures also. So let's take up the journal entries for now. This is the question. As you can see here, there are a number of transactions given for a particular trader for the month of January. So starting from 1st January, we have the transactions of the business, all the financial transactions of the business till 31st January. This is the whole transaction for the month. So we'll start taking the journal entries one by one for each and every transaction in the format. So now you know very well what is the format for the journal entries as per the book of accounting, like we need to prepare. So we prepare the format of the journal having first column of date, then the particulars where we write the journal entries, then it will be ledger folio column, and then debit and the credit balance. For your convenience, I have taken up the solution also. So we will be discussing the solution one by one as we'll take up the entries. So you can see here in the first column, we have mentioned the date, then the journal entries here, and then ledger folio. This is the blank column because here we prepare the ledger folio numbers for the numerical questions. It is not being given. If it is given in the question, we will mention the ledger folio number here in this column. But since it is not there in the question, so it is not advisable to take the hypothetical number. So we can leave the column blank like that. Then it is the debit column amount and then credit column amount. So let's take up the journal entry first. 1st January, it is saying the debit balances on 1st January 2009 is cash in hand 8,000, cash at bank 25,000, stock of goods 20, furniture 2,000, building 10,000. And there are sundry debtors, Vijay, Anil, Madhu. Now you all know very well up till here that when we talk about cash in hand, cash at bank, stock, furniture, building or debtors, these are the type of certain assets for the business. And you know very well that the assets, as if you go back to the golden rule, if you go back to the debit and credit like items where we debit it or credit it, we have clearly seen the pictures that where if the debit is increasing, you need to debit, or the asset is increasing, you need to debit the assets. So here also, when you have the debit balances of the assets, then you need to debit it. So this is also called as the opening entry in the books, where the opening balances, the balance of the previous month or the previous year, which is carried forward to the next year. Because suppose if you have cash in hand for 2009, 1st January, this is the new year supposingly, and 31st December, you have already closed your accounts, and on 1st January, you have new account where the cash balance which has been forwarded from the last year to the next year from 2008 to 2009 is 8,000 rupees. You were having 31st December at the end in the evening, you were having 8,000 rupees in your hand, and in the bank you were having 25,000 rupees. So in that case, what you will do with that cash? You will take it further to the next year so that you can utilize it for the business. So what we are doing, whatever asset balances we have at the end of the previous year or the previous month, we will be taking it forward to the next year or next month so that can be further utilized in the business. So whenever you have such type of debit balances at the beginning of the month or beginning of the year, you put it under the debit balances. So all the assets having the opening balances will be debited in the opening entry. And then later you can see there are credit balances on January 1, 2009. All the credit balances has to be credited. So if there are debit balances, that means it is an asset that the entry is talking about, and the credit balances, it means we are talking about the liabilities. So if liability increases, you have to credit it. If assets have debit balances, you need to debit it. And one more thing, that all the assets will be debited, all the liabilities will be credited, and whenever there is a balance between these two totals, the total assets that are being debited and the total credit that are being credited, if there is any difference between the total of these two amounts, then of course there will be a liability called capital account. So that capital account will be credited with that difference amount. As you can see in the entry here, now let us take the entry. You can see cash account is being created, 8,000 rupees, bank account 25,000, stock account 20,000, furniture account 2,000, building account 2,000, and then there are certain debtors, Vijay, Anil and Madhu. These accounts have been also debited because these are the debtors. Debtors are the assets for the business. So asset has the debit balances, so it will be debited. Then to Anand. Anand is the creditor. Creditor is the liability for the business. Any liability will have the credit balances. Liability increases, the credit balance will increase, and so it will be credited. Bablu's loan account, 10,000, again a liability. Now you can see here, when we add up all the debit column amounts and the credit column amounts. So in credit column, we have 15,000 rupees. If we exclude the capital account will be created later on when we have already created the account for the debit and the credit balances. So if we can see here in the debit side, you will find higher balance of all the total of assets minus the 15,000 of the credit balance that Anand and Bablu is having under the credit column. So all the assets total minus the liabilities total, credit balance total, you will have the difference of 55,000. Now this 55,000 difference will be transferred to the capital account, because when you are preparing any of the journal entries, the debit and the credit amount columns should be equal to each other. Like if in the debit column you have uh, 55 plus 10, 65, 65 plus 570, means debit column you will be having 70,000 and in credit column you will be having 15,000. So the difference between these two amounts, 55,000, will be credited to the capital account, and in this way the debit and the credit amounts will become equal to each other, which should be for each and every journal entry. So this is called as the opening entry in any of the financial transactions. Then coming to the next, you can say, transaction for 2009, that is 1st January. This is the 1st January transaction which we have done right now, is the transferring of debit balances, credit balances from the previous year to the next year, or previous month to the next month. Now coming to the actual financial transactions that has occurred in the month of January. One is, first, purchase goods worth rupees 5,000 for cash, less 20% trade discount and 5% cash discount. See, in this entry, you have to be very clear with it that there can be two types of discounts available. One is the cash discount, other is the trade discount. Trade discount is something which is given by the vendor for the bulk purchases. If you purchase from the vendor in bulk, some raw materials or some stock, then the trader will give you trade discount. So trade discount will always be deducted while showing the amount of purchases in the books. Right? Then comes the cash discount. Cash discount is always given for the prompt payment. Prompt payment means, suppose if the vendor has given you maximum 2 months time, and if vendor says that if you pay within 1 month time gap, then I can give you 5% cash discount for the prompt payment. So in that case, you need to show it in your books that this much is the amount of purchases reduced by the cash discount. The amount of cash discount you have to show in your books, but the amount of trade discount should not be shown in the books of accounts. So let's take up this entry. You can see here, purchase, since purchase account is a you can say if we go with the real account rule, so real account golden rule says debit what comes in, credit what goes out. So purchases, under purchases, the goods are coming into the business, so purchase account will be debited with 4,000 rupees, and cash is 3,800, cash going out of the business, so it will be credited, and the discount amount is 200. Now let us see how this amount is coming up. Purchase goods worth rupees 5,000. So 5,000 is what? It is the total amount of cost of goods that is being purchased. But out of that, 20% has been given as the trade discount. So 5,000's 20% will be 1,000 rupees. 1,000 rupees will is considered as a trade discount. So we will not show this 1,000 rupees in the books of accounts. So when we are purchasing goods of 5,000 rupees and 1,000 is the trade discount, so for showing it in the books of accounts, it will not be taken as 5,000. It will be taken as 5,000 reduced by the trade discount, that is 1,000. So the purchase of goods cost will be 4,000 rupees for the accounting purpose. Further, 5% cash discount is giving. So 4,000's 5%, this will be 200 rupees. So 200 rupees will be given as a discount. So discount here is a benefit for the trader. And if we go with the nominal rule account, expenses and losses are debited, incomes and gains are credited. So here it is a gain for the business because you need to pay 4,000, but you are paying 3,800. 200 rupees discount on the value of goods is being given. So here it will be treated as a discount and it will be credited because it is a gain for the business. Now let us take up the next entry, the next financial transaction occurring on the 4th of January. So received 1980 from Vijay and allowed him 20 rupees as discount. Now we'll go back to Vijay because no transaction is being occurred till 4th January with Vijay. So we'll see the debit balances or the credit balances at the beginning given here. Might be this is the payment related to some previous transaction occurred in some previous time period. So as we can see in the debtors column, there is Vijay standing with 2,000 rupees balance. So 2,000 rupees balance is there for the debtor, which needs to be paid to the business. So Vijay is now paying 1980 and allowed him discount of 20 rupees. So from Vijay, it is 1980 which is getting received, and 20 rupees is considered as a discount. Now this discount is a loss because the business has to receive 2,000 rupees, but it is now receiving 1980. So 20 rupees will become a loss and this loss will be debited. And since cash is getting received in the business, therefore cash account will be debited and Vijay account will be credited, because if we go with the personal account rule, debit the receiver, credit the giver. So Vijay is the giver here. So Vijay account will be credited. And you have to always, I told you in the previous lectures also that always the journal entry has to be done with the narration. So narration is a small description where you give for the journal entry that you are passing through related to the financial transaction. So here you can see being cash received from Vijay allowed him discount of 20 rupees. So this is a small narration along with the journal entry. And see, you have put up the date first, January 4, then the journal entry, then the amount, respective amount in their respective debit and credit columns. Then coming back to the next entry, it is purchase goods from Bharat, 5,000 rupees. Since it is not being said that it is a cash purchase or credit purchase and nothing has been specifically mentioned related to this, therefore we will consider it as a credit, because if it would have been cash, then this has been clearly mentioned in the question, but it has not been given in the question. And since Bharat, some particular vendor's name is there, so we will assume to be assume this to be a credit purchase. So purchase goods from Bharat, rupees 5,000. So Bharat is the vendor here who from whom the purchases are being done. So under this entry, what we'll do, purchase account will be debited and Bharat account will be credited, because Bharat has become a creditor here. So we need to pay Bharat 5,000 rupees. So purchase account, since goods are coming into the business as per the real account, it needs to be debited. Purchase account debited to Bharat account. Narration is being purchases of goods from Bharat and respective amount in the respective column. Then coming to the next entry, it is plant purchased from Mukesh for 5,000 and paid 100 rupees as cartage for bringing the plant to the factory and another 200 as installation charges. Okay, now you can see here, purchase plant from Mukesh for 5,000. Now see, you are purchasing the plant from Mukesh for 5,000 and paid 100 rupees as cartage and 200 rupees as installation charges. Now, you have to be very clear with this concept that if any of the asset is getting purchased in the business and you are paying any cartage, any carriage charges, any installation charges, any setting up charges, any transportation charges, whatever, along with the purchase of the asset, that is the amount, that is the expense which needs to be included in the cost of the asset also. So in this case, 5,000 rupees is the machine cost that needs to be paid to the vendor, plus 100 rupees the carriage charges and 200 rupees the installation charges. This also needs to be further added up in the cost of the asset, that is 5,000 rupees. So 5,000 plus 100 plus 200, this will become 5,300 as the cost of the asset. This is the amount thing. Now we'll come to the journal entry. Now, since purchased plant from Mukesh for 5,000, you have to be very clear that there is a difference between the stock that we are purchasing, and there is a difference of purchase of any other asset. Like if you are purchasing any of the merchandise of the business, merchandise of the business here means the purchases related to something which the business is in purchase and sales. Like if you are purchasing the raw material, you will further process it and sell it. That will become your merchandise. But if you are purchasing any machine to process that raw material into the finished goods, that will be an asset for the business. So in terms of accounting and in terms of recording such transactions in the books of account, there is a different treatment for these two purchases. Though purchase term is there, but if you are purchasing the goods of merchandise, then it will be considered as a purchase of goods. But if you are purchasing any of the asset for the business, for running the business, then it will be treated as a purchase of an asset. Right? So if in the you can see here in entry number January 6th, you can see here purchase goods from Bharat 5,000 rupees. Purchase goods from Bharat here means you are purchasing some goods for the purpose of selling and for the purpose of further processing and selling it. So this is your business, to purchase and sell the goods. That is, it is related to the merchandise of the business. You are frequently purchasing and processing it and then finally selling those goods. So that will be the part of the purchase and sales. But since in this entry it is saying purchase plants, sorry. So purchase plant here means you are purchasing some asset for the business. Machine is a asset, plant is a asset, land and building is a asset for the business. If you are purchasing that, that needs to be debited in their particular account. So if you are purchasing a plant, that then the plant account will be created in your book and you have to make the journal entry accordingly. But if you are purchasing any goods related to merchandise of the business, in that case it will be dealt as purchase account. So in the case of merchandise goods, you need to make the journal entry under purchase account or the sales account. But in the case of any other asset purchased or sold by the business, then you have to make the entry in their respective account only. So in this case, if we see the entry here, it will be, so the entry will be, as we can see here, it is said Plant account, put the date 8 January. Plant account is debited with the total amount of cost plus the other expenses that has been put in for making this plant functional. That is 300 rupees extra. So it will be 5,300 with to Mukesh. Mukesh is the vendor from whom the plant has been purchased. So it will be taken to 5,000 only because Mukesh is the vendor having the outstanding balance of 5,000 rupees only. And then to cash 300, which is being paid by the business to the particular person for the carriage or the transportation charges or the installation charges. So the total plant account will be debited with 5,300. Plant account is debited because plant uh, is basically a real account. Real account says debit what comes in. So plant is coming into the business. So it will be debited with 5,300, and the rest account will be Mukesh 5,000 because he is having the outstanding balance of 5,000 and cash 300. Then coming to the next entry, that is sold goods to Rahim on credit 600. So it is saying sold goods to Rahim on credit. Sales is where the asset is going out of the business. Therefore, sales will be credited. Sales is always a credit item. So sales is credited. Purchase will always be debited. So since it is a credit sales, therefore Rahim account will be credited because Rahim is the receiver here. So sold goods to Rahim for on credit 600. That is the journal entry will be here. Rahim account debited to sales account. As I told you that sales will always be credited. So Rahim account debited to sales account with the amount 600. Date is 12th January and the narration written is being sale of goods to Rahim. You can put on credit also, but the smallest narration is always the best. So whichever way you can concise your journal entry in the smallest way, that is the best narration you can do for the journal entry. So for the journal entries, we will take up in the next lecture. So we will stop here for now. We'll take up the same question in the next lecture. Thank you all.